This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. He's Chris Ferguson. I'm Gabriel Stvoре. We have a special guest with us today. Welcome Yu-Ting Jung to the podcast. And today we are talking about Tesla. Is it good? Is it bad? Do we like it? Do we not like it? Why do we like it? But before we get into Tesla, we do want to profile somebody on the show. We always profile a famous investor. And today we are looking at Michael Burry. And there's a reason why we're talking about Michael Burry is because there's a Tesla connection there. But quick story on Michael Burry. He did his undergrad in economics, and then he went into med school. He finished med school. He was doing his residency in neurology, and he was just a few months away from finishing his residency, becoming a neurologist. And he said, you know what? This whole medical thing is not for me. I'm going to start a hedge fund. And so Michael Burry starts a hedge fund. And this is right around the year 2000. And this is right at the peak of the internet bubble. And he starts shorting internet stocks. So he's basically betting on the fact that this whole internet bubble is going to pop. And he was right. And he made a ton of money. And his hedge fund profited very immensely. He started getting a lot of attention. And then in 2008, he became famous for calling the housing bubble. And so he bet against the housing bubble. And sure enough, he was right again. He made a ton of money. He was featured in The Big Short. So he was the character that was played by Christian Bale. So he was played by Christian Bale in The Big Short. Great movie. I think every investor should watch that movie. And so he became famous for calling these big bubbles. And so last year, actually a year and a half ago, he started shorting Tesla. He said there's a big bubble in Tesla. And he actually, throughout last year, he kept increasing his short position in Tesla. And Tesla basically just kept going up and up and up and up. And this might be the first time Michael Burry was wrong. So Michael Burry publicly went out there and said, I'm going short on Tesla. Tesla's a bubble. Tesla's going to pop. And so far, he's been wrong. Actually, I think he closed his short positions and took a major loss because Tesla would just not drop. That being said, don't feel too bad for him. Michael Burry is very successful, very wealthy. He didn't lose all that much money in the big scheme of things, but this may be his first big public miscue or bad call. So on that note, Chris, I know that you've been talking a lot about Tesla. I know that you're excited about Tesla. What is your take on it? What attracts you to it? And what are your thoughts about the company and the stock?
So I have a slightly different investing philosophy than other people. And I traditionally have not done stocks. So I think I should give some context into me investing in stocks. So I typically only invest in things I know about and after I've looked into them for a long time. So in the context, because I feel like the context is really important before I say what I want to say about Tesla. So my good friend Gabe and I, you may know him, we looked at, so I think that anytime there's a massive change, there's an option for profit. Anytime there's a change, and no matter what the market's doing, if there's things changing, there's a way to profit from it. So when COVID started and everyone was panicking and the airlines dropped, I said, there has to be a way to see a huge upside in that. And the airlines are large and people always have to fly. And even though it's a short-term thing with COVID, people will fly. At some point, people will fly. And if you look at the history of viruses, they typically run a couple of years and then eventually at some point they go away forever for the history of time. So we looked at the airline stock, and bear with me because this is relevant. So we looked at the airline stock, and Gabe, you're much better at reading portfolios than I am. So we looked at the airlines. We picked the 4 that were the most financially stable as a way to hedge the bets, because even if 1 or 2 went under, the others should cover it. Then I took all the money I could afford to lose. I'm like, I can lose all of this, as much money as I can afford to lose. And I put it in those 4 airline stock. And before I did that, I called a few people. They were professional investment bankers, professional financial advisors, other people who regularly invested in stock, and then every single person said, that's the dumbest thing you could ever do. Don't do that. And then they said, who are you to think that you could time the market or play the market and just put your money in an index fund, blah, blah, blah. So right after I put this very large, for me, large chunk of money into the airline stock, Warren Buffett said, this is a horrible investment. And then he pulled all of his investments out of the airlines. And my wife said, this was probably a bad idea, but let's see where this goes. So that was a year ago. And fast forward to this date, I have 100% return in a year. And I made a point to hold the money for over a year so I would pay capital gains tax and not active W-2 tax. So I've minimized my taxes and I've paid no taxes because I have not cashed it in yet. So I firmly believe that no one can read the future. And I also firmly believe that even if someone has a long history, I think your Michael Burry an example is great, because even though someone has a history of great investments does not mean they're necessarily right all the time. So I believe, and I'm not basing this on financial analysis, I'm not doing what other people do. I think that single individuals can make dramatic change either on a small scale basis or a large scale basis. If you look at over the history of time, it was a single individual, say Genghis Khan, who grew the Mongol Empire. If you had to analyze him from birth, there's no way you could predict that, but he just has a history of success. Same thing with Alexander the Great. Like, he just has a history of success. And Elon Musk is one of those guys with a history of success. So that, based on the historical accuracy of certain people, just tend to succeed over and over and over again. And he is one of those guys that just succeeds over and over and over again. And I would not bet against him. Same thing, Steve Jobs. He was at Apple. It was doing great. He left. Apple crashed. He came back to Apple, fixed it. So that is why I am going bullish on Tesla. Also, the Chinese government is embracing Tesla because they're building a factory there. Nothing goes on in China without the Chinese government being on board. And if he gets the Chinese market, that will be dramatically huge. The stock will go crazy. I know people who are personally driving Teslas right now. They love the cars. And it just seems every year you start seeing a few more Teslas on the market. And the people love the cars. But as soon as you hit that critical mass where there are more charging stations and it becomes more easily accessible to charge the cars, I think it only has room to go up. I did watch a few videos. There was someone who invested in Facebook way in the beginning when it started, invested, I think, $100,000, and now he's looking at $16 million in the bank, fast forward 10 years. So I don't think this is a short-term play. This is not a day trading type play. I think this is, you put your money there, you see it go up and down, and 10 years from now, you'll be sitting on a very nice return, significantly better than the index fund. However, I'm only putting in money I can afford to lose. And again, this is what I am doing. This is not financial advice. This is just what I am doing.
Yeah, I think that's the key there, right? Is money you can afford to lose, right? This is not your retirement. This is not your 401k. This is just some extra money you have lying around, and you're investing in Tesla because you believe in this case, it's the founder, right? You just have, Elon Musk is one of those people that chances are whatever he's doing is going to turn out well, right? He has a good track record.
For fun, he built a flamethrower and sold it and made $1 million in like a couple of days. Like, who else does this?
True.
He is building a tunnel underneath a city.
Yes.
And running $2 billion companies. So I think he is probably our day, a modern Genghis Khan, Alexander the Great, except he's not conquering people or killing anyone.
He's the richest
you know.
person in the world at the moment, so he's definitely conquering something. But no, he's conquering space. He's conquering the car market. Definitely, he's on the right track. Lydia, I know that you have Tesla in your portfolio. Tell us a little bit more about your Tesla position and what is your outlook on Tesla?
Okay, so I started to really get into trading stocks. Same thing, just before COVID started. So before COVID started, we have a small position in our stock portfolio. And the same thing, when COVID started, I actually exit most of my position, and then I bought some airline stocks, and profits from that, I sold them, and then I get into other tech stocks. And then that's when I discovered Cathie Wood. I watched one of her speech talk about disruptive innovation, and that really inspired me. Like, I think that's the future, and I think Cathie is like another person that she is also a visionary person for the future. She can see what's going to happen in the future, but of course she sees them based on data. So I started to really watch ARK. Her company is called ARK Invest, and she has the largest position in Tesla. I built my portfolio. I have ARK Invest ETFs, and then my next biggest position is Tesla. So Tesla would be around roughly just less than 10% in my portfolio. And I think Tesla, just like Chris said, Elon Musk, he is a visionary leader. He sees and he really wants to change the future. So whatever he wants to do, he will make sure that he succeeds. So I think there is no better way to follow somebody like him. So I think I feel very comfortable that Tesla is in his hand. And I think Tesla, I've never driven a Tesla. I don't have a Tesla, but all the people around me who have a Tesla, they all loved it. So if it's a good product with a good leader, has a good visionary, I think the future is bright.
Mm-hmm. Yeah, like my personal opinion is that, like you said, it's a fantastic product, and I think both of you guys have said it, and it seems to be true. I remember my first sort of investing experience about products that are good and companies that impress me was back in 2012. I remember it was the first time I got a Netflix subscription. And I was like, what is Netflix? And like, okay, it's streaming on the internet. And should I buy it? Should I buy it? I think prior to that, I did have like their DVD thing where I could get 2 or 3 DVDs a month. But okay, they had this online service. I'm like, that's interesting. And at the time I signed up, right? It was like less than $10 a month. I didn't really watch all that much stuff on it, but my 5-year-old daughter at the time loved it. She figured out how to turn the TV on by herself, find her show. There were no commercials on the show. And like, it was just great. And that's when I realized, I'm like, wow, this is a really good deal. Like if I'm loving this product, then other people must be loving it too, right? And that's when I thought that is a really good way to convince yourself to invest in a company. If you love the product and you're convinced other people must be loving the product too, and it's a good deal, it makes financial sense. You don't regret spending money on that product. That's probably a good investment. And I remember first hearing about Teslas, about like the professional, like auto journalists, right? For like Car and Driver and Road and Track and these magazines, and the car journalists, the individuals who drive cars for a living and write articles about them. Back in like 2016, 2017, they were writing articles saying, I just drove the Tesla Model S, which was like the car at the time. This is before the Model 3 even came out. And they were writing articles saying, this is the best car they've ever driven. Not the best electric car, the best car they've ever driven, right? And I was like, wow, here's a company coming out of nowhere, right? At that time, like, yeah, you could see Model S's on the road, but they were like $100,000 cars. There weren't too many of them on the road here in California. This was like 5 years ago. And out of nowhere, Tesla is like just completely crushing the competition in terms of performance and looks and quality and design. So people who drive Mercedes and BMWs for a living are saying, oh my goodness, this Tesla is the best thing I've ever driven. And of course, as I started having colleagues who got Teslas and friends who got Teslas, they all rave about it. And so The next step for electric cars, that threshold was crossed about 2 years ago when electric cars became cheaper to own than gas powered cars, which means now you don't just have to buy it because it's fun or sexy or whatever. You can buy it to save money. Like if you invest in, you spend a few $1,000s, you invest in a charging kit in your garage, it'll cost you less to own a Tesla than a gas powered car. And you don't have to go to the gas station anymore. You can charge in your garage overnight, blah, 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 etc. Like it's a better product. It saves you money. And on top of that, it's fun to drive. It's got performance. It's got the looks. It wins from a lot of angles. If you enjoy the product, if other people are enjoying the product, if it makes sense to spend money on it, it's probably a good product. It's probably a good investment.
So here's my take is timing, as I think we can all agree, is super important in your stock investing. So if you would have invested in Tesla when the stock first optioned out, early 2000s or early 2010, you would have been sitting on a very flat stock for almost a decade.
Yes.
So that would be a decade worth of no growth.
Just want to mention last year when Tesla almost went bankrupt, I had Tesla and then I sold them.
Exactly.
I didn't make much money. I sold them almost flat.
So
how much did you buy it for and how much did you sell it for?
I think I bought it for $240. I sold it for $280.
That was pre-split, 240 pre-split before the stock split.
That's when Tesla almost went bankrupt. The Tesla went down to like below 200.
Wow.
So the timing is important. So you would have had a decade of no growth, which would have been a horrible investment. However, it did not go bankrupt, and it's hitting the inflection point. And I think we're getting to that point now where people are actively talking about the company. Now, just like Netflix back in the day when it was okay, there were other streaming businesses as well, and it was okay. Nothing great. And you had to like get the DVDs and mail them back in. It was kind of annoying. And they had some movies, but it wasn't like a ton of movies you'd really want to watch. And now it's becoming very dominant. Tesla, on the other hand, it's harder to replicate. Lots of companies can replicate streaming, Amazon, Netflix, Disney Plus, etc. Like that's easier to fix. It's harder to replicate a car company, and tech companies are driven by innovation. And large companies tend to be bad at innovation. You've had the same dominant car companies for almost 100 years, and nothing has really changed. They have had incremental growth. Whereas Tesla, because of its leader, is doing 0 to 1, orders of magnitude difference.
Yes.
And that is why I think we're looking at Tesla right now where Netflix was when they were still mailing out DVDs. And as time goes on, they're going to quickly develop a very, very dominant market share, and the stock is going to pay off in folds. Because it'd be shocking to me if the company went bankrupt. So,
yeah, and I agree with your comment on existing large companies struggling with innovation, and electric cars are a great example. GM released their first electric car in like 1992. It was called the EV1. And anybody who was interested in electric cars, I encourage you to go watch the documentary called Who Killed the Electric Car, which is the story of EV1, this great little electric car that came out in the mid-90s. And GM hated it, and GM shut down production. They only made like 300 or 400 items. And ever since that, you look at the electric cars and they are crap. The Chevy Bolt, I'm sorry, you can't compare a Chevy Bolt to a Tesla. You can't compare a Chevy Volt to a Tesla. You can't compare a Nissan Leaf to a Tesla, right? Only now you have some companies like the Polestar that are getting some good ratings.
Even their names are stupid.
So according to what Kathy said, she said the old DNA won't work. You need the new DNA, which Tesla, if you look at the Tesla, how they build the car, and if you look at Volkswagen's electric cars, or other big car company, they make their electric cars. They're still using the old idea, which is the gas car, the way they build the engine. They just swap the engine to a battery. But that's not how you build a proper electric car. That's why they don't have success.
Right. And this reminds me of exactly when, do you remember when like Apple came out with the iPod, right? The first time that you could buy MP3s, and it had like really cool, it was designed really well, just like a Tesla, and it was cool, and all the kids wanted one, just like Tesla is popular now. But then other companies started coming out with little MP3 players, like, hey, look, we got an MP3 player too. And it's like, yeah, but the MP3 player is just one innovation. There's like 4 other innovations happening with the iPod, right? One of them was like, you can just download songs off iTunes, and you can have this whole, music collection on the internet. It's like a complete new innovation. And so like, if your company had a cool little MP3 player, but you didn't have this cool platform to buy and download music from the internet, like that was another innovation, that hurdle you had to overcome. And Tesla already has 2 or 3 innovation hurdles. One is the self-driving, which I'm sorry, no other company comes close to Tesla there. And Tesla has the charging network, which you don't, a lot of customers don't see that. So they'll go test drive like a Mustang electric car, and then they go test drive a Tesla, like, oh, they feel kind of similar, but it's like, yeah, but you can charge a Tesla in 10 times faster at much better, like not 10 times faster, but you can charge it faster at a Tesla supercharger. And the Tesla superchargers are much more easy to find, easy to locate than like the regular charging network that every other electric car goes on. So there's a lot of innovations happening outside the car, outside just the steel body and the batteries and the engines, that are helping Tesla the same way as iTunes has, helped the iPod back in the day. There's just a lot of innovations coming together. I think Tesla, like you said, Chris, they're way ahead of the competition.
Plus Tesla has all the data that, they have so many cars on the road collecting all the data, which the other company don't have that. That's a huge advantage for them to build towards the autonomous drive.
So when it comes to stock investing, there's a very standard theory of just play an index fund and get a good, consistent, solid return. I have never met anyone that made substantial money other than someone who owns the fund. So if you own the fund, it's different, but then you're making your money on fees because you get paid whether the stock goes up or down. So that's different. It's a different business model. But I have never met anyone that has made a substantial and comfortable amount of money just investing in index funds, because it's a very slow growth. I personally know a lot of people who've done exceptionally well in real estate, and I know other people who have done exceptionally well betting on individual stock. But just like all things, there's a skill set to it. So like 90% of businesses will go bankrupt. But there's some businesses that will do very well and succeed because you're paid based on merit. So I think if you are not good at investing, and the only way to know that is to try it out. If you're not good at investing, or you don't have the time or energy to put into it, or you don't have the emotional stability to do it, I think index funds are great for an average person. If you're good at it and you have the emotional stability to do it, then I think betting money that you can afford to lose is a good strategy.
Well, I wouldn't bet all my money into one stock, though. I don't have the gut to do it. But
that's what I qualified it with. I wouldn't bet everything, and that's why I was really clear in saying money you can afford to lose.
Right.
True. But as your portfolio grow bigger, you will have to start to think how to distribute them so they kind of even it out.
And when you say even out, what you're saying is you're willing to have smaller growth, right? Because your portfolio is not going to grow as fast as the best stock in that portfolio. So you're saying, I'm willing to give up a little bit of growth for a little bit more stability or less volatility.
Right. Because sometimes, like with Tesla, the volatility is so big. If your position is too big, sometimes maybe it prevents you from holding it for a long time because you're so scared at that moment.
And that's why I emphasized emotional stability.
Yes. So Chris, I got a question for you. You held the airline stocks for over a year. And during that year, those airline stocks went up and down and up and down. How often did you look at the value of that portfolio?
I look at like every other day.
And did
Just
you
for
ever
fun.
did you ever think to yourself, oh my God, they're down 10%, I should sell? Did you ever
No.
have like this panic sell feeling?
No, I'm like, this is what I'm
Amazing.
going to do. That's what I'm doing.
That's amazing.
I'm not
So
touching
you-
it. Like, I know that this is a good bet, and I'm just going to ride this out because I know intellectually it's going to go up and down. So I'm not touching it.
Amazing. Good for you. Good
But
for you.
not everyone can do that.
No. So I'm in my early 40s and I'm still struggling with it. It's still something I'm trying to learn, is not to make panic decisions, not a panic buy like, oh my God, my friends just bought Tesla and I haven't bought it for 2 days. I'm going to miss out. Like, no panic buys, no panic sells. It's so hard for me to learn. I'm still struggling with it. I'm getting better, but I've been doing it for a long time, and it's just my personality. I still struggle with it.
So for me, I do take profits when it reaches, let's say a stock doubled, then it's time for me to take some profit. So I'll sell one portion of the position, like 1/3 or 1/4 of it, just take some profit. And then I can use that money to invest in something else.
And Lydia, when you said 10%, is that a number that you chose? And did you ever think, hey, you know what? I like Tesla. Maybe I should put Tesla as 20% of my portfolio, or only 5%? Why did you choose 10%?
I think because I do have a lot of stocks. I have a lot of stocks. I don't have just like 10 or 20. I have more than, I think, 40.
Wow. Okay.
I have more than 40 stocks. So I kind of have to distribute them in a good way. So I have heavier position in more convicted companies that I think it's gonna have a bright future. I also have money to put into some company that's right now is just a concept, but of course it's investing in the future. So I won't put too much money in there, but if they become big in the future, there'll be a huge return for me.
And where do you get your investing ideas? Where do you find these companies to invest in?
Most ideas are really from ARK Invest. The good part about ARK Invest is that they share all their research with the public. So if you go on their website, you can read all the research they did. All the analysts did all the research. They write white papers, and Kathy sometimes write articles. So it's a good way to getting all the information without, you go on a website and try to search all the information yourself. And sometimes you don't know what you're doing.
So how does she make money on sharing all her investing ideas? And all this analyzing with analysts costs money. Yeah,
so she runs her firm very differently. She call her active traded ETFs. So she will post her trading every day. So if you sign up, she will send you an email every day at the end of the day to tell you what did she sell and what did she buy.
What's an ETF exactly? Clarify that.
Yeah, so an ETF is an exchange traded fund. It just means that anybody can set up a fund, but this type of fund, it tries to follow some kind of an exchange. So some ETFs will try to follow the S&P 500. Some will try to follow the Dow Jones. Some will try to follow like the NASDAQ. It follows an index. And Kathy makes money the same way most other funds make money, is she takes a cut. I don't know what her fees are.
She takes a fee 0.75%, which is much higher than other ETFs.
But it's not too bad. I mean, like there are some mutual funds that take 2%, for example, right?
Mm-hmm.
Or 2.5% sometimes. So anything less than 1%, I think, is okay. But yeah, there are some ETFs with a very, very like 0.1% or something. And there are some very low fees with some ETFs.
Yeah.
But
so just based on my personality, I tend to like to specialize in just like one thing. And that's just the way I'm built. And I am just built to just, once I decide that's what I'm doing, I just detach from it. Like if I decide this needs to be done, I will just detach, and that's what's getting done, regardless of anything else.
So you're like Warren Buffett. Warren Buffett said you shouldn't have more than 3 stocks.
Yeah, I would agree. If that's, I'm not familiar with that, but if that's what he said, I agree. If I'm going to invest in the stock, it's going to be a very cautious investment. But if I'm going to do it, I'm going to go all in, and then I'm just going to leave it for at least a year at minimum, mostly because I don't want to pay the capital gains tax. And if I'm really sure on a stock, I'm looking for a longer term investment, and I'm just going to sit it and leave it. But I think I differ from Warren Buffett, where I put a lot of value in the person running the company and less so on financial measures, because I think financial measures are lag indicators, meaning things happen and then it shows up in the spreadsheets, versus lead indicators like who's running the company and where's it going.
Getting back to Cathie Wood for a little bit, I think it's important to say that Cathie Wood really became famous over the last 2 or 3 years because of Tesla. So Cathie Wood became very bullish on Tesla a long time ago, I think maybe like 5 years ago or something. And
in 2014, that's when she started her fund.
Yeah. Okay. So 7 years ago, almost 8 years ago now. And she's always been big on Tesla, and her research has always been very bullish on Tesla and saying, yeah, Tesla is going to do super well in the future. And most other analysts and most people in the financial media really disagreed with her. And I remember 2-3 years ago seeing videos of like Cathie Wood on like MSNBC and these other TV shows. And these are all on YouTube. You can check them out even today, where they were grilling her. They were like, Cathie, you've been bullish on Tesla for the last 2 or 3 years. Tesla's going nowhere. They might go bankrupt. Like, you are a professional investor. You're managing other people's money. How can you be so irresponsible? What are you doing? Like, what are you thinking? And I got to hand it to her. Like, she took it. She stood by her convictions. Like, I'm convinced on Tesla. At some point, it's going to take off. And she took the ridicule, and basically she was right. It took off.
She has her confidence based on all the data and analysis. So she started to give Tesla a target price at $4,000. That's before Tesla split. And she has been saying that for years. Even when Elon says he's gonna take a Tesla private, and she actually sent Elon a message saying, please don't take Tesla private.
I can make more money if you don't take it private. Please don't take it private. I love it. And so right now, so basically she was right? Because now Tesla is split. Tesla's at
Tesla reached the target $4,000. Then Tesla split.
And so right now
she has a new target. Says Tesla is gonna go up to 4,000 again from right now.
Wow.
Does she have a time frame?
5 years, I think.
Wow. Okay.
So in her portfolio, most stocks, if she takes, it's about 5 years time horizon. Like, that's how she will hold them, unless the stock, the fundamental changes. Otherwise, she will.
So even if she's half right, that's a 2.5-300% investment or return on your investment in 5 years. That's really good.
Yep.
If not sooner.
If not so, yeah. If she's right, then you can double or triple your investment in Tesla. Again, this is not financial advice. This is just us talking. But if she's right, and she was right before, right? Her analysis was right before. So yeah. So
Michael Burry, he was right. He was very right twice, and then he was wrong. So everyone can be wrong. So let's sum up then. So Gabe, what are you going to do? Hey, what are you going to do with Tesla?
Yeah, so I don't have a big stock portfolio. I dabble more in options. So without getting into the details of options, I already have a very bullish options position on Tesla. Without getting into the details, they call it a butterfly. It's a specific type of options play. But what it is it's if Tesla goes up to $1,500 within the next year and a half, then I open this position for $120. I could sell it for $2,000 or $3,000, maybe more. So it's a very, very low. It's almost like fun money. It's almost like just going to Vegas and pulling a slot machine a few times. Right now, based on the options pricing, it has a very low chance of being right, but it's $100. It's that's the most I can lose is $100 if I'm right, and if Cathie's right, and Tesla goes up to 1,500 or higher, I might make a few $1,000s on it. So for me, it's just more of a fun position, something to buy beer and pizza money with, but nothing, not a big loss.
What is the return? So if Tesla goes up to what and by when?
Correct. So my bet is that it goes up to at least $1,500 a share in the next, I think it's about $300. I'll put the position in the show notes, but I think the position expires in 300 or 400 days from now. So if it doesn't go up there in the next 300 or 400 days, then I lose my $120 bet. But it's a low probability, high payout type bet. If Kathy's right, if Tesla goes up, then yeah, I'm going to have a fun weekend.
Okay, we're going to have an offline conversation about this option thing because or we can have a podcast about it. But I think I want to make a bet if you're willing to help me on the
absolutely,
side of things.
Absolutely. We'll have to have a different. I'm happy to do a podcast.
We'll do
a separate show. Yes, yeah. Because options are complicated. It's a complicated topic, not beyond the scope of today's discussion. But we'll do another show on it.
We're doing that one soon. Okay.
I don't have options for Tesla. I only have shares. So my goal is to slowly adding to my position. If Tesla had a huge run recently. So I'm waiting for it to come back a little bit. I'm going to accumulate some more shares.
What's your trigger to buy into it? Because right now
I think if Tesla retraced to around $900,
okay,
that's when I will start to buy more shares.
Do you think it'll come down to $900? Or do you think it's going to keep going on its run?
I was hoping. I have my buy set up there, so it's just automatic. If it drops to 900, then it'll buy it.
So you already have the order placed.
Yeah,
right?
I already have the order placed in. So
and then the order triggers if the price dips down to 900. Okay.
Yeah.
And I think that's reasonable.
I got another question. So right now Tesla is around $1,000 a share. Lydia, I believe you use TD Ameritrade. I use Tastyworks, and I think on those two platforms, it's not possible to buy fractional shares, which means you either have to buy one share at 1,000, or two shares for 2,000, or no shares. You can't buy half a share for $500, right?
No, you cannot.
Does the price of the share, does the fact that it's $1,000 a share, does that impact your decision on when to buy or sell?
No.
Okay.
It does not. It's not about how much the share costs. It's about, Tesla is a expensive stock if you look at their PE ratio. I think right now it's around 300 something.
Correct. So their price to earnings ratio.
Because the company is growing so fast, the PE ratio is going to come down eventually.
So that's correct. So Tesla right now as a company is valued at $1 trillion, and its price to earnings. And that $1 trillion is roughly 300 times what they earn in a year. So that as a number. So for every $1 Tesla earns, the company's worth 300 some odd dollars, which is extremely high. So by comparison, Apple is, Apple and
30.
Microsoft are around the same size. They're
30, around 30. 31 or 32, I think.
Correct.
Now the cheapest company right now for the big tech is Facebook, which right now is Meta. Oh, they haven't changed the ticker yet.
So getting back to Apple and Microsoft are around $2.5 trillion net worth as a company, and they're trading for around 30 price to earnings, right? So Tesla is like 300. It's 10 times that. It is quite high, but then again, Tesla is very much in its growth phase. So
yeah, it has a lot of room to grow if you look at the market share for electric cars. So even let's say 10 years from now, most cars will be replaced by electric cars. I think right now we're at 1% of the market.
Mm-hmm.
So the market is huge, even with other players. Let's say Tesla take, 20% of the market share or 25% of the market share. That's still a huge growth in front of the company.
So right now here out here in California where we live, like there's a lot of electric cars on the road. Chris, out in the Midwest where you live, how prevalent are electric cars on the road when you're driving
They're
around?
not. It's just a few cars here and there. It's like maybe like you'd see maybe one car every few days.
Mm-hmm.
Yeah.
Have you seen any of the electric pickup trucks, any Rivian pickup trucks out where you live?
No.
No. Okay.
I haven't seen one either. Have you?
I've seen one or two. Yeah, they're starting to be out there now. It's
Really?
yeah,
Okay.
yeah. But yeah, I think
I
that's
can't
gonna,
wait for Tesla's truck come out.
I know. I think that's going to be really
I
big
really
for
want to
Tesla.
buy one.
But people talk about a tipping point. I know people in the Midwest really like their pickup trucks. And yeah, once the electric pickup trucks are coming, I think Ford's coming out with electric pickup. Rivian's already out with one. Tesla should have been out by now, but Tesla's always a little bit late with their new products. But once you see these electric pickup trucks hit the market, I think you're going to see a big shift, and it's going to happen quick. A lot of people will start buying electric cars.
Well, the power, okay, so if you're just looking at a performance value, if you look at a normal sports car, they're kind of pricey and they're designed that way for the horsepower. I've spoken to a few people who've been in the Teslas and they say they blow a Porsche out of the water as far as acceleration. And objectively, it shows that. So you can get so very, very few people can get those supercars, but a Tesla has almost the same performance, if not better, at a fraction of the cost. So why would you not go with the Tesla?
Exactly.
Totally. And and after you go to the drag races with your Tesla and have a great time with your buddies, you can pick up your kids from soccer practice right after, right?
Exactly. So this is why I think I am going to go long on Tesla with stock. And then Gabe, we're going to do another podcast on options, and I'm going to put up money with your help, an options trade on
All right, we'll
Tesla.
do it. We'll do it. So Chris, so right now I don't own an electric car.
Mm-hmm.
I drive a clunker. I'm very proud. I drive a fully paid off 2012 Hyundai Accent. It's a piece of crap. It's funny.
Mm-hmm.
My teenage daughter is embarrassed to even get in it.
Mm-hmm.
And I've always been saying, okay, the next car I get is going to be a Tesla. The next car I get is going to be a Tesla.
Mm-hmm.
I didn't put any miles on my car because of the pandemic, so it's helping sort of push that decision down the road. But I think in a year or two, when this car dies, my next car is a Tesla. Chris, are you considering buying a Tesla?
Well, I have a 2010 RAV4 and it works just fine. And I don't like buying depreciating assets. So I have no incentive to buy a Tesla at any point because my RAV4 is working just fine.
Interesting.
So next car is going to be electric.
I'm going to have this car for a while.
I know in the
probably
future.
not.
So Chris, you haven't had that discussion yet at home with your wife, saying what kind of car is going to be our next car and when do we get it? And
no, the conversation is I'm keeping my car because I only like buying appreciating assets. Because I look at it and I with a brand new car, I drive it off the lot and it's already dropped in value, which makes me really sad.
So with Tesla, it's different though. Based on what Elon says, Tesla can be used as a money-making machine or a tool.
The car?
Yeah.
How?
So when autonomous drive started to kick in, you just sign your car out, and then your car makes money for you.
Like an Uber. Like the idea is,
yes.
like the car drives around by itself, and people pay money to be driven around in it.
Then that's not a depreciation product anymore.
So that theoretically is true. However, that assumes I trust random people in my car, and I don't know what they're going to leave there.
Interestingly enough, and I love where you're going with this, Chris, because I think we're going to do one of these episodes, right, on Turo, right, which is a company that basically people who have high-end cars, like I can buy a little Mercedes, a Tesla, a BMW, and then rent it out to people on you can rent it from me kind of thing, right? It's like a Airbnb for cars. And there are a lot of people have 3, 4, 5 high-end cars and they rent it on Turo, and that's how they make a monthly cash flow. And I think it's a perfect good investment. You and I can talk about it one episode. The one big difference between, let's say, that and real estate is a real estate, like a house will appreciate, whereas that car, whether like a Mercedes, BMW,
Mhm.
Tesla, other people are driving it, you're racking up miles on it. Eventually it is losing its value, right? But that's a different discussion for
It's a
another
different
day.
discussion.
Yeah. I think that's a great way to end it, by the way. The fact that you only invest in assets that appreciate. I love it. I mean, that's the whole point of the Money Seed podcast, Chris. Thank you.
Yeah. I wish I can think like you and I can deal with my portfolio like you, but I can't. It's just,
Well, and I think it really is a very emotional thing. And this is why I think there's certain people with a temperament that they tend to just succeed, and other people, and I think we all know this, and this is how I'll end this, is we all know people who, no matter what situation they put them in, they tend to muck it up. Like they just do, based on their temperament or based on the way they see their world, etc. And other people, you put them almost anywhere and you give them just a little bit and they will succeed over and over and over again. And the empires, countries have been built based on individuals. And often people will say, well, you're just a person working and it doesn't matter. But people who tend to say that tend to be the most replaceable people. So on that note, I'm betting on Tesla simply because Elon Musk is running the company and he's driving the innovation. And often in business, it's not the biggest company that wins, it's the most innovative.
so Chris, do you have an entry point you're thinking about? Like, when are you gonna?
I didn't really have one, but I like your entry point of $900. So if when it dips below 1,000, which it probably will at some point, that's my entry point.
Good.
So I liked your advice. So that's what I'm going to go with. So you've helped me with that. So thank you.
Well, I recommend you watch Kathy's video.
I wasn't really familiar with Kathy Wood, but I'm going to start watching her stuff now.
Yeah, it's good. She also talked about I can't remember that. Anyways, you can watch it every month, every first Friday. She has an episode called In to Know Kathy.
Cool. Does she have a podcast?
She also, ARK Invest also have lots of podcasts regarding other innovation technologies.
Cool.
Yeah, and we'll put those links. Yeah, we'll put those links in the show notes. And Chris, you might, you being a doctor, you might find her biotech stocks really interesting, right? Because you probably understand that science better than the average Joe. And so, yeah, she does have a lot of companies in the like genomics and biotech and that kind of space.
Yeah.
Which I don't personally understand very well, but I think you have a really good foundation for that.
I think when you have a few different people with different skill sets looking at the same data and then coming up with an investing plan, I think that's better than one individual doing it alone. So on that note, so we're all bullish on Tesla. We all have a variety of ways of doing it. And in a future podcast, I'm looking forward to learning about this option betting.
Sounds good. All right. So thanks everyone. And we'll have to do it again sometime soon.
This was great fun. Thank you all.
Thanks.
Yeah.